Good morning, everybody. I'm delighted to be here today with three amazing panelists. We are going to talk about the state of play in emerging markets. So we are going to talk about lessons learned, expectations, and what we believe the future will bring to us. To start with, I would like to ask my fellow panelists to introduce themselves and in a short introduction explaining where you see the biggest opportunities from your perspective. Let's start with you, Omar.
Thank you, Gabriella. Omar Rifai, I'm a managing director with Gulf Capital, and I lead the growth capital strategy. We invest across Africa and the Middle East. The strategy that I had calls for $10 to $30 million investments across key sectors, and that's where we think there is the best opportunity now, and that is across tech and fintech, consumer to a limited degree, and then healthcare and business services.
Thank you so much. Vivina, Berla, founder and CEO of Vimine Holding.
Good morning. Yes, the name is indeed Vivina Berla. I founded Vimine Holding about 3 years ago after spending 10 years focusing on growth stage, emerging market, mid-market companies across Africa, Asia, and Latin America. I, at Vimine, broadened the range because I feel that there is a lot more that can be done by advising and investing in companies that contribute to the sustainable development goals.
Thank you so much. And we are moving to Ogbemi from Helios Investment Partners. Mamba unfortunately couldn't join. He had this fortunate situation of having a baby, so in the last minute you joined. Please introduce yourself.
Thank you, Gabriella. I'm Ogbemi Ofuya. I'm a partner at Helios Investment Partners. We are an Africa-focused investment firm. Managing just under $4 billion of assets exclusively focused on Africa. We invest across a wide range of sectors, but the key investment thesis is around investing in market-leading companies that form part of the core economic infrastructure of the most significant economies in Africa. We have historically been very active in telecoms and telecom infrastructure, financial services and technology, energy and power. We also invest in the consumer goods and distribution sector. So investing also across the continent of Africa, from Egypt down to South Africa. So very active across these markets and continue to seek out opportunities, actively as we invest out of our new fund.
Thank you. Thank you for this introduction. So what we are going to talk about is really a reflection and relative value. And when I prepared for this panel, of course, I looked up the economic projections and predictions of IMF. And, there are some set facts here. So the cumulative per GDP capital losses of emerging markets have been 20% in comparison with 11% in more advanced economies, and an additional 95 million people expected to have entered the ranks of extreme poor in 2020, and an additional 80 million more undernourished than before. These are really sad facts in comparison with advanced economies. How have you experienced these pandemics from your perspective? Have you seen great performing investments? And what is your perspective, how the pandemic impacted your relative investment area? Let's start with you, Omar.
Thank you, Gabriella. Yes, some sobering statistics. And I think within emerging markets, there's a disparity of data points. Some have fared better. What we have seen in the markets we invest in across Africa and the Middle East, and many of our portfolio companies have exposure to other emerging markets within Asia, is actually that there is a recovery. We are probably halfway there. The majority of our investments have been showing quarter-on-quarter growth for Q1 this year versus Q4 last year. And we're on track for Q2 showing better results. So the way we view it is really sector selection is what has differentiated kind of performers and non-performers. And in terms of which economies will progress and recover faster, it really depends on what has happened with the vaccination rates, where they stand in terms of oil commodity exports and imports, and how their individual governments have handled the pandemic. So we have been fortunate enough to see positive outcome from the geographies that we've been invested in and the sectors we've been invested in.
Mm-hmm. Thank you so much. Vivina, what is your perspective on what have you learned in the last 12 months?
Unfortunately, I'm not sure that I've learned much. I've had a lot of confirmation of concerns that have been brewing for a long time. And as well as confirmation of what is important when investing in private markets in particular. Leadership, quality of the people, the importance of selection, and that by that I mean very granular selection, not just country and sector, but people and teams, because when we're talking about bottom-up investing, which I think in private markets trumps top-down, once the first major selection of ecosystems has been done. What I have sort of witnessed is very much like Omar has said, certain sectors, certain companies, certain peoples have fared better than others. But as you, Gabriella, pointed out, generally speaking, the inequality has actually increased enormously as opposed to being reduced. And in the pandemic, the differences between approaches and the quality of the infrastructure and the quality of the people who are in charge of systems and policies and indeed vaccination programs have become very, very stark. And my hope, and I believe we're going to talk about it later as well, is that technology improvements will allow, hopefully, for those differences to become more muted going forward, depending upon the choice of the leadership will make, both in companies and in countries.
Mm-hmm. Thank you so much. When I was doing investments in emerging markets, I met a very good friend, and he mentioned to me that when I asked, how are you dealing with the global financial crisis? And he looked at me and asked, crisis? Which crisis? We have been in crisis for 20 years. We are used to uncertainty. Ogbemi, have you seen this reflected also in this last 12 months? Was it an advantage for you and for the investments you had been dealing with that you know how to deal with uncertainty?
No, that's a very good question, Gabriella. I would say the environment definitely will always come with some fair share of challenges. You know, it was the pandemic last year. You know, in prior years, there have been all sorts of fiscal or macroeconomic challenges. What I would say, though, is it's been a striking year for, latching onto the point Omar made on sectors, right? And the fact that people were stuck at home, couldn't really work, there was not as much activity as ordinarily one would have, meant that there was a lot of transition to, digital living and working. People immediately were setting up shops online. They needed to create a website. They had using all the social media tools, and that drove up broadband demand. And so for certain sectors, in the telecom infrastructure space around digital enablement broadly, you actually see a surge in demand for those services because people need to continue to generate economic activity. That's one point. Certain sectors were also resilient. In the food sector, people continue to eat at home, not in restaurants or in casual dining chains, but those sectors also remain resilient as they were addressing really basic needs. And it ties to the core pieces we invest into, which is non-cyclical core economic infrastructure that supports the normal functioning of economies. Now, one key point I will make, though, is the pandemic has had a significant impact on the earnings power of most of the countries because of a reduction in export revenue and earnings. And so in Africa, what you will find is whatever social blanket may have existed pre the pandemic has actually become even smaller. And there's just less capacity to fund, social delivery of social services in these markets. Now, what is seeming to provide a flow of support around the continent is actually foreign remittances into the continent. And so we are also very, very big believers in investing around remittance infrastructure, which allows the continued flows of, of funding into various African markets. And, when you look at the studies, remittances actually make up a huge chunk of the foreign exchange flows into a lot of the large African economies. And that ratio of contribution increased during the pandemic because of the reduction in the government capacity to fund a lot of these social goods.
Mm-hmm. Thank you. If you look at the risk premium in comparison with advanced economies, and of course that the risk has moved, do you think that the risk premium is sufficient? Maybe let's start with you, Ogbemi. Do you think that that investors are getting enough premium for the risk they are taking?
Yeah, that's a very good question. And I would say, we probably can spend the whole day talking about that. The way I like to address it is, I think investors need to look at a point in time decision when they're making an investment, right? I don't think there's a permanence of a risk premium or a relative valuation between markets. Markets, evolve and ebb and flow in their kind of key metrics. And what I would say is, if I were an investor sitting today trying to make a point forward investment decision, I will kind of feel, that there is a sense of, frothiness in kind of the developed markets today, where the stock market or just valuations are generally private and public markets compared to emerging markets. And I will be making my bet on a go-forward basis today on emerging markets simply because there feels to be more underpinning of the valuation. So again, I wouldn't try to avoid answering the question, but I would say, that concept of a premium, it all depends on what point in time you are in the cycle and what your expectation of returns are going forward.
Yeah, thank you. Vivina, what do you think about this?
I think that's a very astute comment from Ogbemi, and I would add that it's not only the point in time, but also the perspective of the investors. We've always heard about home bias, both in developed markets and even more so in emerging markets. Now, I tend to be passionate about Africa. I've been in and out of Africa for 40 years. I constantly ask myself whether there isn't a little bit of wishful thinking when I say that Africa is the continent of future opportunities at this point in time. I would also say that there is a question of the difference between the perceived risk and the real risk. So the three of us seem to be very familiar with Africa, and the challenges that we recognize, we understand the difference between the African challenges and other challenges in other markets. And they seem to be less scary, maybe, to us than to people who know nothing about Africa. So similarly with the opportunities, because the premium is relative to something else, and we're talking about risk-adjusted return. So, one of the subjects that we talked about is where do we see the opportunity? Which one is an investment that we feel particularly good about? And, when I talk with friends and colleagues about, a data center platform in Africa, they look at me and they say, "You're mad. Why don't you invest in a technology company in the US?" And so the risk-adjusted premium that I see in Africa can be very different from the one of other people in other continents with different set of knowledges and experiences. And to me, at the end of the day, it's an individual choice and opportunity, not a macro one. And so who knows whether my investments and favorite investments are going to work out, but it's my personal bet. And I shouldn't call it bet, I should call it opinion or hope or investment outlook. Have I lost you? Have we lost Gabriella?
Yes, I think we have temporarily.
Hopefully.
Exactly. I guess while we wait for her to come back, perhaps we could get your views, Ogbemi, about how you see within Africa different regions playing out. This has been a subject that's come up. Perceived risk versus real risk. Certain countries doing better than the others, but the investor community still paints us with one brush. Africa as a whole. It'd be great to hear your perspective on how you're seeing the different countries within Africa play out.
No, thanks, Omar. What we'll say is, okay, we can talk about the larger economies, Egypt, Nigeria, South Africa. Those are the larger economies. And then you have Kenya, you got the kind of the West Africa. I tend to describe in terms of just the monetary zone, the CFA zone, Cote d'Ivoire, Senegal, and the rest of, Francophone West Africa. Then you got Central and the rest of Southern Africa. What I would say, though, is there has been macro weakness in Nigeria. There's been macro weakness in South Africa, driven by structural policy issues to a large extent. Egypt seemed to have fared better, significant capital inflows, working, consistently through with the IMF on the reform program. Now, we tend, while we make investments in companies that are domiciled and operate in some of these large countries, most of the time, we kind of tend to take a Pan-African view in terms of building platforms that straddle a lot of these major economies to create a portfolio effect. So generally, as we head into a period of firmer, stronger commodity prices, the traditional commodity exporters, Zambia, Nigeria, Angola, will begin to see a slight improvement in their overall fiscal fortunes as they earn more foreign exchange. Now, the service-driven economies, especially tourism into Egypt, Kenya, have kind of have put a drag on those economies. But as travel returns, our hope and expectation is those economies will even recover even more strongly out of the pandemic. So overall, every country is unique. We tend to focus on the large, countries where we can build platform of scale, or we tend to focus on the regions where we can build a Pan-African type business. But overall, I think there's definitely safety in diversification and scale. And when you have, multiple cylinders driving a business across some of these major markets, it tends to offset temporary weakness in one market. Overall, though, I will say this, the direction of travel is positive across every single African country. There may be bumps on the road, but from a macro physical perspective, the direction of travel, if you look over a multi-decade period, is definitely positive.
Thank you for that. And I'd like to make a comment because I know that we were meant to talk about it, which is this debate about geographical exposure across emerging markets versus sector exposure and themes. And we do have some differences of opinions that, for us at Gulf Capital, what has worked very well is a thematic approach and a sector approach. We see it in the data. We have went in with this approach prior to the pandemic. And we have seen that by selecting key sectors and focusing on avoiding single country risk, trying to build out kind of pan-regional companies, either on the buyout strategies that we employ or the Gulf Capital strategies we employed, we have really seen that strategy come and play out throughout the pandemic. And back to the risk premium aspect of it, when you look at what's driving the performance of a lot of our portfolio companies, and what has helped them in what is arguably very difficult markets kind of navigate very well, you see a lot of aspects that is not captured in the risk premium. This goes back to Viviana, your point, real versus perceptive risk. So the demographics, the industries that have been underpenetrated by technology, all of that has been shaping kind of a very nice set of opportunities to invest in, and obviously performance in our existing portfolio companies. I think, Gabriella, are you back on?
Yes. Talking about emerging markets, I'm calling in from Amsterdam, but my internet connection was cut off, and it has never happened before. It's just Murphy's Law. My apology for that. So what I would love to finish up on in this session is the interdependence I experience. We can all conclude that the pandemic impacted us differently, but we also learned that we are dependent on each other a lot more than before. And without building a proper ecosystem in emerging markets, it is impossible to address our challenges in the environment, our challenges in the education. So one of the things I learned that we are really dependent on each other. And what are the messages? What are the takeaways for you? How can we impact the future ecosystem? And maybe let's start with you, Vivina. What do you think about how you can help to build an ecosystem where we can help to address this interdependence?
I think the first step is just to be aware of the issues. And the second step is to realize that no action is too small to start. I think it is very easy to say, oh, it's the government, or it's the multinationals, or it's the system that does not work. It is true, the system does not work and the governments are not doing enough. But the truth is that it all starts with each one of us. So you're asking me, what do I do? And I become very aware. I have been doing a lot of studying and research. And in the way that I act and I invest and I build my portfolios and I ask questions of the companies I invest in, I ensure that there is a question, and just asking the question can have a profound impact about what are you doing about it. And I think if we all ask those questions of each other, ultimately the message is going to be heard more and more widely. And then finally, there is this question of short-term versus long-term, which is a real tension. And it has always been a short-term, not always. In the last few decades, it has been short-term and profit maximizing without measuring the cost of such a focus. So to the extent that we realize, understand, and accept that there has been a cost to our behavior, and we try and shift that mentality, ultimately we will succeed, because we now have better tools than we ever had before in order to execute on the change that is required.
Yes, thank you so much. But I think the same challenge we also have in advanced economies. You know, we need to show in terms of transparency reporting, what is our impact, not only financial impact, but impact on the environment. And it's a big challenge, and it requires also a different mindset, a different ecosystem, a different education. Omar, what do you think about this in terms of interdependence and transparency of your impact?
I think this is a very relevant subject, and the Gulf capital, this is a priority for us and has been for a long time. The way we approach it is we need to be responsible investors, not in the sense of following every single charter out there, which we do, but in the sense that we play an active role in a lot of the economies that we invest in, and we invest in companies at different stages of their life cycle. How we conduct ourselves in terms of all the value add that we bring, which focuses on profit maximization and maximizing exits and returns for our LPs. But throughout that interim period, really driving the ESG agenda, really driving kind of the good ethics that the whole agenda is trying to bring forward early on into a company, into each layer of that organization, I think will and has in the past shown that it makes a positive impact overall to everyone, every stakeholder involved.
Yes, thank you. In the meantime, I want to share something with you. I received a polling question results that, over 50% of people see emerging markets as higher risk than advanced economies. I mean, what I read around this is that, okay, if it's higher risk, people expect higher return, most probably higher transparency. So a lot more challenges from your perspective as a manager to make sure that you generate the alpha. Are you ready for this? And which sectors can you deliver these results? Omar, I'm still with you.
We are ready for this. Look, we view the perception of higher risk as a double-edged sword, quite frankly. It limits the amount of capital coming in and chasing what we believe are great opportunities. And we do think there are higher returns that you could achieve that justify that risk premium. We absolutely like the tech space and the fintech space. We are seeing our companies, I did some stats. We have 30 portfolio companies, a handful of them in the technology space. They have grown 90% year on year. And we see a good opportunity there where the price points are at lower valuations in developed markets. Healthcare space, where governments have failed to provide basic services to their people. We see good opportunities there where we have been making nice returns. And in general, certain elements of the consumer space that have been neglected, quite frankly, because of the perceived risk around them, we're starting to see some pretty interesting opportunities and entry points.
No, thank you so much. Ogbemi, what is your perspective? Are you ready for that? And are you ready for showing the transparency also in ESG perspective? And what do you do to help with that?
No, definitely. Look, ESG has been a core of what we do, right before ESG became popular. So we've been, implementing pretty high ESG standards to our portfolio companies. And now, even reporting in more granular detail, the impact our investments have had, through the communities our companies operate in. So definitely, it's core to the DNA of how we invest. I think from a return perspective, we feel very excited. There are interesting opportunities. Omar has mentioned, financial technology broadly, digital payments, that whole, virtual banking experience that most Africans are now experiencing, because of the advances in just mobile money technology. I think that's a very interesting space broadly. Telecoms and infrastructure and just being able to connect people will remain interesting. The provision of energy and power to people, just the per capita consumption of energy in Africa is a fraction of what it is in other emerging markets relative to emerging Asia, for example. It just shows there's a significant gap to be filled there and could go on and on. So from that perspective, exciting. And from an investment opportunity set, we feel it's definitely a very interesting one in the years ahead.
Thank you so much. Vivina, what is your perspective? Are you seeing enough opportunities? And in terms of risk-adjusted return, are you seeing enough efforts to show increasing transparency in terms of ESG aspects?
I don't see enough efforts, and I think that regulation is going to be an important part of it. And I'm just thinking about the EU taxonomy, which I hope will be replicated across the world, really. Regulation has costs. Therefore, it will have an impact on returns, but I see plenty of opportunities. And maybe just to add, the little one is in a world that is increasingly digitalizing, the question of trust on the internet is a very interesting one. And I've been hearing about trust infrastructure and how to apply it in a world where trust actually, frankly, has taken a big knock. Will that be the next opportunity? Who knows? I hope so.
No, thank you so much. I think I have to close this very shortly, and I learned quite a lot from you. It seems that the pandemic impacted the regions and geographies quite differently. It seems it also brought quite a lot of opportunities. It seems that you are confident that you are delivering these opportunities, and also you are confident that you deliver also a lot of added value in terms of sustainability and social development goals. And I'm really hoping all the best for the audience to address these questions in the remaining part of the conference, and a lot of good health to help everybody to address the challenges. Because if there is one thing that we learned in the last 18 months is that we are really dependent on each other. So thank you so much. It was my pleasure to moderate this panel, and I look forward to seeing you hopefully in person.